So in this section, I'm going to be covering sentiment and risk on and risk off, otherwise known as RORO investing. Now, pretty much sentiment or RORO investing is understanding the mood of the market, and we are constantly in either one of two states when it comes to sentiment. Either we are in a risk on environment or a risk off environment. And risk on environment, simply put, is when the market perceives low financial risk, and a risk off environment is when the market perceives high financial risk on the horizon. So high financial risk environment is when there is a lot of uncertainty. So for example, if there is war, if there is any type of economic or political uncertainty. So political uncertainty would be elections, general elections, where the polls are close. And let's say, for example, the government of the day, which has been favorable for the banks and their policies, they are potentially under threat of giving up or losing the elections, right? And the opposing party are maybe, let's say, they're anti, bank or anti-establishment or whatever. If the polls are quite close and there's a lot of uncertainty around the elections, we would be considered, or the market would consider that country to be in a risk-off environment. Now, in a risk-on environment, money tends to move to higher yielding assets. So it will move into stocks, higher interest currencies, and I've put there the carry trade. Now, the carry trade is simply a way for banks to really buy a low return currency. So for example, if the pound was at was returning, let's say for example 0.5% interest, right? And then the US dollar was returning a 2.5% interest rate. What banks and hedge funds and the financial institutions will do is borrow the pound at 0.5%, and then they will buy into and invest into the dollar, right? And then they will collect the difference on the interest rate they're paying to borrow the pound, and obviously get the returns from the 2.5, which is the dollar, which is what they're investing in, which is basically 2%. So that's what you would call a carry trade. So they will borrow cheap money and put it into higher interest currencies or other stocks. And a risk-off environment will be where investors are more concerned with keeping and storing their value. They're not concerned with trying to get a higher rate of return. So a risk-off environment, investors will be looking to put their money into gold, stuff like gold and government treasury bonds, where it's a safer asset, right? They're guaranteed, but they're more likely to hold their store of value in uncertain times. Now in Forex, there are currencies that will do well in risk off or risk on environments. So risk on currencies, meaning the ones that would tend to do well in a risk on environment, are the Australian dollar, the Canadian dollar, and the New Zealand dollar. And these currencies are also known as commodity currencies. And this is because the country's main exports the currencies are linked to the country's main exports. So for example, the Australian dollar, their main export is iron ore and copper. In Canada, their main export is oil, and the New Zealand dollar, their main export is dairy. So if the price of iron ore and copper falls, what you will find is that the Australian dollar may not do so well, and likewise for the Canadian dollar and the New Zealand dollar. So risk off currencies, when we are in a risk off environment, the Japanese yen, the Swiss franc, and the US dollar will tend to do well. Investors will put their money into especially the Japanese yen is probably the number one risk off currency, followed by the Swiss franc, and the US dollar has been known to be a risk off currency. Now, at the time of recording this is what the situation is, and it is subject to change over a period of time, depending on obviously the environment and where interest rates are, etc. So what I would do is keep a close eye on the markets and how they do change, if they do change at all. But the Japanese yen has really been a risk-off currency, and so is the Swiss franc for years, for decades. So when it comes to choosing a currency pair to trade, if we have a risk-off environment, what you would really want to do is look at buying the Japanese yen or the Swiss franc and selling the Australian dollar, Canadian dollar, and New Zealand dollar. So those are your currency pairs to trade in a risk-off environment, and vice versa if we have a risk-on environment. So just to recap, sentiment and risk-on and risk-off environments, RoRo trading, really sentiment can change quite quickly as well. So you may have a situation where, let's say, for example, the president of the United States and, let's say, a country like North Korea, comments are made, right, which could indicate some sort of tensions. A risk-off environment can develop extremely quickly, but then all of a sudden change because maybe the comments weren't seen as anything. It could just be, quite a flippant comment, and maybe nothing meant behind it. So as soon as we have maybe, the comment was made, which maybe indicated some sort of tension between the two countries, it can just as easily be dismissed. But the effect of, certain comments can have a short-term effect on the price of a currency. But also depending on the risk event, for example, something like elections, that can, if an election drags out, let's say, for example, there's a hung parliament or there's a coalition government that the market doesn't necessarily like and will be unfavorable to certain banking policies or economic policies as well, that can also sentiment can also last for a while. So a risk-off environment can last for potentially months. So also what you want to do is, when understanding what type of market we're in, is monitor correlated markets, right? So again, in a risk-off environment, gold and treasury bonds, government treasury bonds, will do quite well. Whereas in a risk-on environment, you will have commodities like oil and also stock indices and the stock index like the S&P, FTSE 100, etc., will do really well because traders are looking to get a higher yielding return on their investments. So when trying to decide if we are in a risk-on or risk-off environment, other than typing in Google, we can actually see whether we are in a risk-on or risk-off environment by certain news articles. What's useful is to have the S&P 500 or a stock market index, and the S&P 500 is pretty much just the top 500 companies in the US market, a composite of those 500 companies, and you can compare whether the treasury note, the US T-bond treasury note, is in a downtrending or uptrending market compared to the S&P 500. So as we said before, the stock markets will tend to do well in a risk-on environment, and US treasury notes will not do so well in a risk-on environment. So you can see in this example, what we would do is look at the uptrend and certain structures within the S&P, and also do the same thing with the treasury notes. And then what we would do is we'd say, okay, let's pick a currency pair that will benefit from a risk on environment. So the Australian dollar, the Canadian dollar, as well as the New Zealand dollar, and as well the US dollar and the euro. And we would look to buy those currency pairs depending on obviously the fundamentals behind them, and then we would look to sell currencies like the Japanese yen as well as the Swiss franc. So this pretty much just gives us some confluence as to where and what side really and currencies we should be buying in the environment that we're in, right? When it comes to the sentiment analysis. So when sentiment and fundamentals are in alignment, it gives us an opportunity, a potential opportunity to take part in some trending markets, right? Because if you have, and it can be quite powerful when you have these two aligned and you're on the right side of the market, and there's really no need to exit, for a certain amount of pips, let's say 30 pips, 40 pips. If you know you've done your fundamental analysis, you've got sentiment on your side, you can hold for, hundreds and hundreds of pips. Now, when sentiment and fundamentals are not aligned, this can give us a potential opportunity to buy at value. So we always want to do our fundamental analysis first, right? And if we establish that fundamentally the country of interest is in, let's say, for example, the expansion or boom phase, and they're looking at raising interest rates, they're on an interest rate hiking cycle, their central bank is quite hawkish, and everything is looking good, and then we choose obviously the opposite to trade against, an opposite country to trade against. We're in maybe the recession phase or the bust or slump phase of their business cycle, and they're looking to cut rates or even introduce quantitative easing. We've done our fundamental analysis. Now, what sentiment can do to the currency we're trying to buy is drive prices lower, and this could be because of some potential again, war rhetoric, some uncertainty, or potentially a general election, whereas the fundamentals are still sound, but there is some uncertainty around the environment that we could potentially be entering into, right? But once the dust settles and the risk on environment occurs, what would happen is the risk off sentiment that would have driven prices down on a fundamentally good country, right? Let me just get our tool. So what I'm talking about is prices could be driven down, right, sentiment wise, on a country that you feel is strong fundamentally, and then once the risk environment is favorable to that country or currency, right, what this does is this allows us to now potentially buy a currency for cheap, because we know fundamentally, right, we are on the right side of the market, and once we have an environment that is favorable to our trade, we're buying down here, and then when we get again the alignment of fundamentals and sentiment, this should push prices higher and potentially get us lots and lots of pips and profit. So again, it's understanding sometimes the sentiment around the currency and the country that you are looking to buy into. It's just make sure that they align when you're looking to trade, and if they don't align, then don't worry, don't panic, it's okay. Prices do not always represent value, and we are at the end of the day using fundamental analysis and sentiment analysis to determine what currency pairs are undervalued and overvalued as well, but undervalued if we're looking to buy and looking to take advantage of that scenario.